Recent leaks from within the United States Treasury have revealed that Janet Yellen, the current Secretary of the Treasury, has officially pledged a staggering 70% of the United States national debt to XRP, with the digital asset being valued at $10,000 per coin. This revelation has caused the world of finance to witness what could be the most seismic shift of the century. This is not only a rumor or a headline, rather it is a significant reorganization of the monetary system in the United States of America, portraying XRP not as a simple cryptocurrency or speculative asset, but rather as a fundamental component of the future dollar system, where it will serve as the cornerstone. Taking this enormous step not only radically reimagines the management and backing of the national debt, but it also heralds a seismic shift in the manner in which governments may conduct their financial operations in the digital age. The United States of America is incorporating blockchain technology into the fundamental foundation of its fiscal policy, as opposed to the conventional fiat currency that is only supported by confidence in the government. By utilizing the decentralized ledger and one-of-a-kind features included inside XRP, the Treasury documents that were released, albeit being substantially redacted in order to protect sensitive information, plainly suggest a collateralization ratio that pegs XRP at $10,000 per token. This is a drastic revaluation that institutionalizes XRP as a government-backed asset of unsurpassed significance. The documents in question provide a description of a structure in which the blockchain of XRP serves not just as a transaction ledger, but also as collateral backing a major chunk of the United States debt. Because of this revaluation, not only does the market standing of XRP improve, but it also establishes a clear connection between the success and safety of the XRP ledger and the future stability of the United States dollar and the national economy. The combination of blockchain technology with the management of government debt is something that has been foreseen by financial experts for a long time, but very few envisioned it coming to fruition so quickly or on such a large scale. Rapid action was taken by market whales, which are major institutional investors and holders of XRP, in the immediate wake of this discovery. The movement of more than 1 billion XRP tokens into strategic wallets was confirmed by on-chain data, and it coincided with an emergency meeting that Secretary Yellen apparently called for herself. Insiders and institutional players have a great deal of faith that the value of XRP will greatly increase, as seen by the sheer amount of transactions that have taken place regarding this cryptocurrency. These entities appear to be positioning themselves to gain from a significant price increase that is directly linked to the support and incorporation of the government, as indicated by the rapid accumulation of these entities. An unusual link is shown when the behavior of the market is analyzed in conjunction with the national debt clock, which is a real-time tracker of the debt held by the United States government. This hyperdebt connection demonstrates that the value of XRP increases in tandem with the exponential growth of the United States debt. It would appear from this that XRP is no longer working only as a market asset, rather it is functioning as a debt-backed financial instrument that is directly connected to the fiscal health of the United States government. A direct association of this kind had never been shown before till recently. On the other hand, this new dynamic has the potential to turn XRP from a volatile cryptocurrency into a stable store of value that is fundamentally related to the economy of the real world. There is now a convergence among financial experts and cryptocurrency strategists over a consensus price objective. By 2025, it is anticipated that the price of a single XRP currency would reach. This forecast is not founded on theoretical hype, but rather on actual legislative actions and market statistics that indicate institutional adoption on a scale that has never been seen before. The current price of XRP would be positioned alongside or even above this valuation if it were to achieve this level of valuation. This would imply an enormous rise from the current price, assets that are considered conventional in the financial sector. Some estimates imply that up to 50% of the Federal Reserve's reserves might be denominated in XRP. It is projected that the Federal Reserve will store a significant amount of its reserves on the cryptocurrency known as X. Because of this transition, the way in which central banks handle monetary policy, liquidity, and the economic stability of the nation would need to be radically altered. Not only does this transition have internal repercussions, but it also has significant international repercussions. It would appear that China is taking a determined stance in response to this new paradigm on the international scene. It has been reported that China has started selling off a significant amount of its holdings in US Treasury bonds and reinvesting the money into the purchase of X. This action is indicative of a purposeful shift away from traditional financial instruments and back towards blockchain-backed assets. The action in question constitutes a substantial realignment of geopolitical position. In a world where digital assets are increasingly considered as the future of financial stability and power, governments are competing with one another for influence. The shifting power dynamics in international finance are brought to light by China's policy of selling off US treasuries and purchasing XRP. This approach also underlines the loss of traditional fiat assets as the dominant form of currency. This global shift away from securities based on fiat currency and towards assets backed by blockchain technology, such as XRP, has tremendous consequences for currency markets, trade agreements, and the management of sovereign debt all across the world. It is possible that nations may want to diversify their reserve currencies or replace their present reserve currencies with digital assets, as XRP-backed reserves gain importance. This is because the conventional dollar-centric strategy may face significant problems. However, this transition may also generate new possibilities for investors and institutions who are prepared to embrace these innovations. It is possible that this movement may produce higher volatility in the foreign exchange market. The conventional financial markets are already starting to experience the tremors that are caused by this transformation. There is a possibility that fiat currencies all over the world may be subject to devaluation pressures as a result of the increased movement of liquidity into blockchain-backed assets. Taking into consideration the new reality, in which digital assets are an essential component of national and international monetary systems, requires investors and institutions to modify their portfolios, risk models, and compliance frameworks in order to accommodate this new reality. Given that the price increase of XRP is being driven by both market demand and institutional mandates, those who are early adopters of the new role that XRP will play or who understand the implications of this role stand to gain handsomely. XRP has gotten extraordinary support from the government, which is one of the qualities that makes this development extremely intriguing. Cryptocurrencies have been regarded with severe skepticism for a considerable amount of time. They are frequently disregarded as speculative or uncontrolled investments that are susceptible to manipulation. A paradigm change has occurred, however, as a result of the Treasury Department's decision to incorporate XRP into its debt strategy. This decision has bestowed legitimacy upon XRP as well as the expanded blockchain ecosystem. This support from the government has the potential to pave the road for further regulatory acceptability and institutional investment, which will ultimately lead to more adoption and price stability. The adoption of blockchain technology by the Federal Reserve is more than just a simple collateralization attempt. The Federal Reserve acknowledges the revolutionary potential of blockchain technology, which has the ability to improve the safety, speed, and transparency of transactions throughout the entire financial system. Traditional financial procedures have been insufficient in light of the growing national debt and the demands placed on the government's budget. There is a new and viable alternative available in the form of blockchain-based assets, such as XRP. These assets have the potential to expedite the implementation of monetary policy, enhance liquidity management, and enable more precise control over the supply of money. This digital transition guarantees that the United States will continue to be at the forefront of financial innovation on a global scale. This integration of XRP inside the management of the United States debt is a significant geopolitical move in addition to the financial and economic factors that are involved. Through the utilization of XRP, the United States not only accomplishes the modernization of its monetary system, but it also combats economic risks posed by competitors by developing a blockchain-backed alternative to the dollar. This idea has the potential to act as a deterrence against economic sanctions, trade conflicts, and currency manipulation, so giving the United States with increased financial sovereignty and power. A valuation of $10,000 for XRP by the year 2025 is supported by a multitude of data sources including Treasury documentation, on-chain activities, and market research.